Now, South Africa's markets are still adjusting to realities of the cabinet reshuffle. The currency initially gapped higher, trading to a high on 14.74 on the announcement, but has recovered somewhat, a sign that the market has taken this announcement in its stride. Head of Equity Research at FNB Wealth and Investments, Chantal Marx, joins us now for a conversation on this. Chantal, very good afternoon. Now, the markets don't seem to be reacting too badly to last night's cabinet reshuffle. Talk us through how it's performing so far.
Yeah, we've actually had a pretty steady day on the market today. Most companies trading higher, particularly the sector or the index heavyweights, which obviously will help matters. But we've also seen a bit of an uptick in the mid-cap space as well as small-cap stocks trading higher today. Gains being led by the industrial 25 by sector, and that really being driven by renewed strength in process and mass batch today.
Now, South Africa's net foreign reserves rose to $51.649 billion in July from $51.368 billion in June. What are some of the factors that drove this increase?
It doesn't seem to be anything major. The gold price in dollar terms was actually up during the period, which aided the foreign reserve position. And then there was also some currency impacts there, just helping matters along as well.
Now, staying with gold, Anglo Gold Ashanti suffered a 10% drop in first half earnings, hit by the combination of lower grades, COVID-19 related disruptions, high costs and suspension of underground mining activities. Talk us through those numbers.
Yeah, it was actually a very big miss relative to expectations. Both earnings and production numbers were weaker than anticipated, and costs were higher than anticipated. So really the pressure coming from all fronts. The dividend was also well below forecasts. And if you look at production guidance, that was actually revised lower, and production costs were revised higher for the full year. So just mostly it's pointing to what can only be termed quite a disappointing and soft result from them.
Now, taking a peek at banking, Absa released its trading statement for the 6 months ended June 30, 2021. How have they fared?
It's actually been an interesting few days in the SA banking space. Wednesday after market close, Nedbank released a trading statement signaling that its earnings per share for the half year was going to be higher than anticipated. We've seen the same thing coming through from Absa as well as Standard Bank this morning. So all three of those banks saying that headline earnings per share are going to exceed market expectations. And I think that is probably a function of higher than anticipated impairment releases, which in turn signals that the bad debt experience as a result of COVID-19 was probably not as big as imagined, and also that the economic recovery might have been a little bit stronger than what they initially thought.
And finally, Sasol also released their trading statement for the year ended at 30 June 2021 and their restatement of the prior year results. Talk us through those numbers.
So the trading statement was bang in line with expectations. They expect core headline earnings per share to be between 27 Rand and 30 Rand. The market was looking for 28 Rand 80. So bang in line with expectations there. And it seems as if the operational performance was also in line with expectations if you look at their operating profit number, excluding depreciation and amortization. So a pretty steady performance from Sasol, really rebounding from what was quite a weak first half or full year 2020 on the back of higher oil prices, and I think also lower debt levels aiding in their finance costs coming down.
Chantal Marx, Head of Equity Research at FNB Wealth and Investments, thank you for your time this afternoon.